Good afternoon and welcome to the EQTEC PLC 2023 AGM Proceedings. Throughout this recorded meeting, attendees will be in listen-only mode. Questions can be submitted via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question submitted. However, the board will respond to key questions during the meeting, with all questions being reviewed and responses published on the Investor Meet Company platform where appropriate to do so. I'd now like to hand you over to Ian Pearson, Non-Executive Chairman. Good afternoon, sir.
Good afternoon, and good afternoon, ladies and gentlemen. I'd like to welcome you to the annual general meeting of EQTEC PLC. I'm a non-executive director of the company, and I'll be your chair for this meeting. It's now just after 2 p.m, and I declare the meeting open. I'd now like to introduce the board. To my right, there is David Palumbo, the Chief Executive Officer, and to my immediate right, Geoffrey van der Linden, who is the Chief Operating Officer, and to my left, there's Nauman Babar, who's our Chief Financial Officer. Two of the directors, Joel Edelman, our CTO, and my fellow non-executive director, Thomas Quigley, have been able to attend the meeting in person today and have sent their apologies. Ladies and gentlemen, I'd now like to start the formal proceedings of this AGM. We will, as in previous years, go through these, close the meeting, and then proceed to a company presentation and a question and answer session. The notice of the annual general meeting, together with explanatory notes, was posted to shareholders on the 25th of May 2023. Accordingly, the requisite notice of the meeting has been given. I propose, therefore, that with your consent, the notice of the meeting should be taken as read. Is that agreed? Yep, thank you. Voting today will be done by way of a poll on each of the resolutions put to the meeting. This is best practice, as it gives all shareholders the opportunity to participate in the decision making of the company and have their votes recorded in proportion to the number of shares that they hold. I am appointing Nauman to act as scrutineer. A summary of each resolution will be shown on the screen to my right and shared on the screen, together with a breakdown of the proxy votes we've received after each resolution is put to the vote. The poll will be conducted when each of the resolutions have been proposed to the meeting. The results of the voting, including the proxy votes on each of the resolutions, will be announced through our regulatory information service and published on our website as soon as reasonably practicable. We will now proceed to vote on the resolutions which I will formally propose to the meeting. The full text of each of the resolutions is set out in the notice of the meeting, a copy of which you will have received. Resolutions 1 to 5 are proposed as ordinary resolutions and require a simple majority to be passed. Resolutions 6 to 8 are proposed as special resolutions, which are to be passed and require a majority of 75% to vote in favour of the resolution. When you registered your attendance, you'll have been given a poll card, which shareholders and proxies for shareholders should complete and sign as indicated. In the case of corporate shareholders, the poll card should be completed by their authorised representatives present at the meeting or by their proxy. You have three options for each resolution. You can vote for, against, or you may withhold your vote. Vote withheld is not a vote in law and will not be counted in the calculation of the proportion of votes for or against a resolution. I should also mention that for those shareholders who have already lodged a proxy, you do not, of course, need to complete a poll card unless you want to change your vote. So let's move to the resolutions. Resolution 1 is to approve the increase in the authorised share capital of the company so that it can be increased to €213.2 million by the creation of an additional 13.2 billion new ordinary shares of €0.001 each. Such new ordinary shares ranking pari passu in all respects with the existing issued and authorised ordinary shares of the same sum, each in the capital of the company. The board recommends increase in the authorised share capital of the company in order to provide flexibility to the company on requirements throughout the year. And as I explained, to vote, would you please tick the appropriate box on your poll card to vote for the resolution or against, or you may withhold your vote.
Is there a poll card?
If you could, there are the back of the room.
Yes.
Resolution 2 is to approve the annual report and accounts for the year ended 31st of December 2022. I now propose that the annual report and accounts for the year ended 31st December 2022 be received. Will you please vote on these now also? Thank you very much. Resolution 3 concerns the re-election of the following directors who retire by rotation and who are eligible for re-election in accordance with Article 87A of the company's Articles of Association. Those directors are Nauman Babar and Geoffrey van der Linden. The board recommends that each of the directors be re-elected as a director. If you could please vote on those now as well. Thank you. The board is recommending that Grant Thornton be reappointed as auditors of the company. I propose, therefore, that Grant Thornton be reappointed as auditors as shown on the screen under Resolution 4. If you could vote on that now as well. Thank you very much. Resolution 5, as shown on the screen, relates to the authority of the directors to allot shares. Before the directors can issue shares, they must first be authorised by shareholders to do so. It is now proposed that the directors are hereby generally and unconditionally authorised to exercise all powers of the company to allot relevant securities within the meaning of Section 1021 of the Companies Act 2014, up to an aggregate nominal amount equal to 4.5 million euros. It's proposed that this authority shall expire at the conclusion of the next annual general meeting of the company unless previously renewed, varied or revoked by the company in a general meeting. I propose that the directors be authorised to allot shares in accordance with the terms set out in that resolution. If you could please vote on that now. Thanks very much. Moving on to Resolution 6, which is a special resolution. It relates to the necessary amendment to the Memorandum of Association to correctly reflect the updated authorised share capital of the company following the passing of Resolution 1 above. If you could please vote on that now. Thank you. Resolution 7, which is also a special resolution, relates to the necessary amendment to the Articles of Association to correctly reflect the updated authorised share capital of the company, again, following the passing of Resolution 1 above. So we're doing both the memorandum and the Articles of Association. Please vote on that now. Thank you. Lastly, I propose Resolution 8 as a special resolution as shown on the screen, which empowers the directors of the company to allot equity securities for cash pursuant to the authority conferred by Resolution 5, which we've just gone through, as if Section 1022, subsection 1 of the Companies Act 2014 did not apply to any such allotment up to an aggregate nominal amount of 4.5 million euros. It is proposed that this power shall expire on the conclusion of the next annual general meeting of the company, unless and to the extent that such authority is renewed, revoked, or extended prior to that such date. And could you please vote on that now? And when you have finished the voting, if you could please return your completed polling cards to the scrutineer. And should you need any further assistance, the company secretary would be very happy to assist you. That concludes the formal business of the meeting. I'd like to thank you all for your interest and attendance and declare the meeting closed. The results of the meeting, as I mentioned earlier, will be announced to the markets through our regulatory information service and posted on our website as soon as practicable. I'd now like to invite David and the executive team to provide an overview of the company's performance during the year, following which there will be an opportunity for shareholders to ask questions. David, over to you.
Thank you very much, Ian. Thank you everyone for joining our AGM. Please bear with me and apologies for not only my accent to contend today, but also my hoarseness. So we will go through the presentation. We put a business update and outlook presentation for our shareholders today. And we would like to start with some points of confirmation, for our shareholders as well, in terms of a few, important or priority subjects that have been raised in discussion with most shareholders. The first one of that is Italy MDC. So Italy MDC, as we announced, has been completed in December 2022, and operation started in March 2022, and now we are in the middle of a handover. The onboarding of and the training of the full team has been, a priority. It has taken, in terms of hiring and training the team, a bit longer than expected to find the operators in the geographical location. It's important to remember that we are taking extra care to make sure that operationally the plans work very well, because this is our first MDC. And as a first MDC, it's already fulfilling its strategic purpose. As we mentioned before, we already had a number of visits in the plant, with another one with a major utility happening next week. We also have been sending the syngas composition data to not only strategic shareholders, but also customers. So we are already using Italy as a market development center, and we expect, in the coming week or so, to finalize the handover protocol. Another thing that we have obviously been monitoring very closely, as everyone knows, we are all shareholders, and most of us with a significant stake relative to our means, is the shareholder behavior in the last 18 months. I mean, we have data behind this one that we can share if we have time later in the Q&A. But if we look since the 2019, the last quarter of 2019, where this management start with the transition and the new strategy, I mean, benchmark against proxies in the space, the company still, although has moved in line with most of the proxies, it still shows a 40% improvement ahead of most of the comparables. Another metric that we follow closely is revenues. So if you compare with us the selected proxies that we benchmark against, the revenues are between 1.6 and 26 times ahead of the comparators. And another important metric for us and for shareholders as well is EBITDA losses, which are significantly less than the comparators as well. This is always says to the share performance. From an operational point of view, I mean, a lot has been delivered, and as the numbers highlight, we have better financial metrics than most of the sector. In terms of another important point is the placing. How has been the placing in the last 18 months? First of all, it's important to mention that any growth company needs capital, and this is the purpose of the AIM market, is for fast-growing companies looking to secure growth capital. In our case, the important thing here is how critical is how that capital is deployed to create value. In our case, the purpose of this capital is to finance the pivot to the capital light model that we're discussing. Now, every technology company in our space talk about this capital light model, yet some of these require hundreds of millions, even billions in infrastructure investment and years before transitioning to that model. Our strategy has a certain level of resilience built in, which allows to focus on smaller project and market development centers that has a shorter lead time and a lesser requirement of capital to still be able to achieve and leverage those market development centers for the pivot. So that's what we are focusing on them. We believe that we're better positioned to do that transition quicker with less capital than others. But also one thing that is highlight the current capital market is that we need to find an alternative form of than capital market funding. And in that context, we have moved to sourcing more aggressively a strategic investor. In the context of a strategic investor, we have announced as well that we have engaged a top-tier investment bank to help us on that process. We've been evaluating with them a number of alternative structures that include private vehicles for the infrastructure, but also alternative market exchanges, where the real value of the company can be acknowledged and realized. Also, as we transition more and more, and we'll talk more about this, working with large-scale utilities, corporates, we don't need to get involved in the project funding as much, and those same customers can be our strategic investors. And Jeff will come to explain later how those corporate and large utilities will become our go-to-market vehicles. And lastly, talking about communication, probably I'll pass on to Jeff to explain more about what we're doing in communication.
Yes, and on communication, I think the first thing I should do is apologize for the first bullet point on this page, which should read, completed December 2022, operational March 2023. Handover now. Apologies for the typing error. More broadly with communication, when we met in this AGM last year at this time, we discussed communication. And I made a commitment on behalf of the business that we were going to improve our communication. What we've done since then is published in our annual report from this year, our approach to communication. And that is we've consolidated now multiple agencies we had working with us into a single agency. So we have a much more integrated approach to that. We've also looked at regular reviews of the market broadly, and also of regular postings that are being made by shareholders, as well as by comparators and competitors and so on. We get regular weekly updates on those, and we are looking at ways of responding to them. We've also ramped up our communications with the government in the UK, but also in the EU and in other places, notably in France, and gradually now moving into Italy. Where we have not, I think, addressed enough is in social media. And what has become very clear to us is the news flow, the ongoing flow of information about what the company is doing is critical. Because in the absence of that, we've written here, nature abhors a vacuum. If we leave a vacuum of that information in the market, it is filled with misinformation. And unfortunately, over the past 12 months, we've encountered a lot of misinformation about our activities and what we're doing. Things are quite a lot simpler and quite a lot more straightforward, as I hope we come on and talk about here. So what we have done is we've put a plan in place with our agency now, where we will be filling that gap with regular ongoing information. Yes, some of it will be repetitive. Of course it will be, because not everyone sees the post for the first time. But that's a big area of focus for us in terms of communication.
Okay, moving to our strategy. I think now we want to highlight and remind ourselves and our shareholders what our strategy is. All of the activities that we have updated previously in the previous slide should be taken inside the context of our business strategy. We set our business strategy 2 years ago, and we have consistently applied the business strategy to as a reference and for prioritize and for making the right decision making and to adapting to the current market condition. We previously also announced that given the market changes in early 22, with the Ukraine crisis, we were forced, to accelerate our strategy towards leaving behind a lot of the legacy arrangement that we have that were not necessarily aligned with the strategy, and embracing new opportunities that fit well with the strategy. To reconfirm our business strategy, we are focused on 3 pillars. As EQTEC, as a platform for development. The first one is our market propositions that will target our 4 business model that we show here, and the other part of this is to attract and support those customer types for those market propositions. We need to work with partners to develop the MDCs that showcase that business model in practice and shows also the technologies, the EQTEC versatility of the technology, not only from a technical point of view, but also to address different business cases. In terms of our own business model, as we say, is shifting to become a technology licensor, like we said in our strategy from the beginning, and very focused to have a specific place as such in the project value chain. In order to be able to take that place, we must position EQTEC among the best delivery partners and not do the delivery ourselves. We need to position EQTEC also among the best technology partners and also about the right type of strategic investor that we're looking for. In terms of our to build our operating model to service that, or we can call that as well, our execution platform, we need to be focused on the technology innovation and engineering, and with very strong go-to-market that incubate, develop, and maintain and support those customers. And it's very important because those customers will be the owners of their projects, where we have no equity in this project, hence being able to transition quicker to a licensing model. To be able to maintain this engineering leadership that we have, we must continue to grow the capabilities. We continue to hire, recruit, and train the best process engineering and innovation talent. And we need to partner with other engineering companies, which we're already doing, that extend our capacity to deliver more of our technology in more places, with the ability to scale.
So, in one of our recent videos that we released at the same time as our annual results in early May this year, we talked about the notion of a pivot. And pivots mean different things, but let's get beyond the jargon and talk about what we actually mean. And really, David, and what he's just outlined or reminded us of in terms of the strategy we put in place a few years ago, is that pivot. And in fact, here, when we met last year as an AGM, we talked about that pivot as well. The main thing that I want to get across here is the pivot from being a project-focused developer to being a technology-focused licensor is easy to understand intellectually, but it's much more interesting when we unpack the implications of that for how we generate revenues and how we manage the business. And so that's one of the really key things we want to get across today. What it means, first of all, is that we're going to move beyond supplying our own capital. We are not a balance sheet company. We do not have a lot of capital. And in fact, as David said at the outset, raising capital in these current market conditions is very difficult to do. We are not the only company. We talk to many other companies, some of whom are much larger and much more focused on capital raising, who are struggling as well. We want to focus on the thing that we do best, which is developing the technology and innovating that technology and that IP. We had several announcements last year about everything from contaminated plastics to putting in place a steam oxygen gasification capability that opens up the door to move us beyond the electron, i.e. combined heat and power, to the molecule, by which we mean, renewable natural gas, hydrogen, liquid fuels, and other types of chemicals like ethanol and methanol and so on. We are able to supply to those markets with our synthesis gas because we are constantly staying ahead. We are not at all, being myopic about our current technology, and we are constantly investing in moving that forward. That is where our strength is, not in trying to develop those projects. The important thing about that is, therefore, we're moving away from a situation where we have to hold the liabilities for these projects. We announced in our annual report, last year we released the company from 18 million euro worth of liabilities, and we avoided those tremendous costs to the company because we were getting out of that business model. Those are the types of numbers that we need to be able to play for if we're a developer. When we move into being a company where we're purely focused on the technology innovation, we are investing far less capital in that innovation and getting a lot more leverage from it. And we're becoming famous as a result of it in places like France that we'll come on and talk about. What we're also doing is we're shifting those liabilities away from EQTEC to the project owners, because we are no longer project owners. And in fact, in our last board meeting, when we looked at our revenue forecast, we only identified 3 projects where we are still invested in those specific projects, and a much longer list where we are taking orders for our technology to supply to other people's projects that they have to finance, they have to take the risk for, and they have to fund. We've talked in the past as well, and I'll give a status update on that in a moment, about the unbundling of our pricing and the unbundling of our solutions. When we are in the business of doing exactly what the first pillar of the strategy is focused on, which is getting more reference plants, we just want our technology deployed. So we bundle together the technology, the right to use the IP, the services to install that technology, the services to commission that technology, the original services to design the solution for a specific plant. We bundle all of that together simply to get things deployed. What we will gradually do as we get more of these plants up and running, and we are getting more of these plants up and running, as we do that, we will then be able to charge for every single service we provide at market rates, at market margins. We will charge for the right to use our IP and get licensing revenues year on year as recurring revenues across every plant running our technology. And we will be able to charge for all the services associated with advising and commissioning those. That's going to give us regular and ongoing revenues as we grow. So we're moving away naturally, therefore, from being a project business to an order book business. And the implications of that are extreme. It means that this company will not hold abilities for projects. We will not be bound by the milestones of projects, financial close, FID, or even COD. Although they will be targets for us, we will simply be supplying the technology to achieve them. If the financing falls short, it will have an impact on us, but it will be an indirect impact, right? And we will simply turn our attention to other projects that are getting closer to financial close or closer to FID. We will get an increasingly longer list of projects to mitigate the risk that we cannot deliver revenues. So this is a very significant difference, because right now we're being asked questions about, when are you going to hit this milestone? When will this plant go live? And that's a fair question when we're trying to still get up reference plants. But as we move over to this model and as more of those reference plants come online, the question then needs to become, are we going to hit the revenue forecast? And we will have a longer set of projects that we can choose from to do that. So we're moving from that project ownership to being the core technology supplier or provider to other people's projects. To do this, as we've said, and as David outlined as part of, a key part of our strategy, we have to have the best partners. We cannot rely consistently on small scale local partners. And I'll come on in a moment and talk about what that has cost us. We saw it recently in California. We took a 4.7 million euro write-off because we did not work with the absolute top tier partners who mitigate the risk of delivery. That is something that we have to take seriously. In the future, the more projects we have, the more we can mitigate that risk. But because this is an early stage project, it has hurt us. And so what you have seen, I hope, is that we are gradually moving to working with the top tier national or multinational partners. And the names that we are associating EQTEC with are very readily getting involved with us. And those are the players we want to work with. And that's not only on delivery, the likes of Wood as a technology partner, or Petrofac, or Black & Veatch. This is also in terms of some of the partners now that we're announcing that we're going to deliver projects with, the likes of IDEX on Limoges and so on. So in terms of an update on how that pivot is going, the first 3 bars you see here are the actuals in terms of proportionality of technology sales and services revenues to project development services revenues. And what you see in the first 3 years is we were pursuing a strategy of driving our own projects in a market where raising capital was possible for us. What you're now seeing is a decline, and the 2023 numbers are based on our management forecasts. We're already seeing a decline in the proportion of project development services and a greater amount of revenue coming in from technology sales and services. What you then see, and you've seen a similar chart to this before that went a bit further out, but this takes us up through the end of the decade. What we will begin to do now is unbundle those and charge for every service, charge separately for equipment. We won't call it technology sales, we'll call it equipment sales. And we will have a range of engineering services charged at market rates and margins that we will be able to bring in as recurring revenues. And then over time, we will gradually ramp in licensing, probably bundled in the beginning with maintenance as well. So over time, more of our revenues will come from recurring sources, from a larger number, a longer list of projects. And that will be something that we will be able to use to make ourselves more resilient. By the way, all of these slides will be available on the IMC portal or on our website, after the event. In terms of what we're doing with our GTMs, our go-to-markets, right? There are 6 areas we've been focusing primarily: the US, the UK, Greece, Croatia, Italy, and France, right? And we've been involved in those, actively involved, as David pointed out, since 2019, since this management team came on board, for a varying number of years. But if we start to look at the go-to-market capabilities here, something quite interesting emerges. And that is that in some of those markets, namely France as the real example, and Italy and Croatia, we're seeing very, very rapid performance in terms of starting to land deals. And we've always seen the pipelines come quite quickly. Why is that? Well, number one, we've got a strong partner or a strong MD and a strong local team in place leading the go-to-market. The second thing is we've got strong local delivery partners. And in many cases here, Cosmi, who have been a long-standing EPC partner of ours, who know our technology very well and have partnered with us on many of these projects, continue to be a very reliable partner. And we're building new ones in France and in Italy as well. And the last thing that's crucial here is, in terms of development liabilities, in terms of moving away from projects, you can see that in these areas, we are not holding the liabilities. In the case of the Italy MDC, we still hold a piece of that ownership, but that is something that over time we may potentially decide to give up. If we look at the legacy, we still have work to do. If you look at Greece, to a lesser extent, but in the UK and the US, what you find is we do not have yet strong local GTM capability. In Greece, we're renegotiating now in a way that we will get that, but we have not had that. In terms of strong local delivery, it is still missing, with the exception of the UK, where we've got strong partners, but we've had issues with funding those very large projects. And finally, in terms of development liabilities, we tend to be actively involved in investing in those projects. So the goal here now is to take our business strategy that David outlined, and in the same way we've successfully put it into France, which is greenfield for us. It's a new market. And then now in Italy and Croatia as well, we need to apply that into our legacy markets. And that is the process we're going through.
So following on what Jeff is saying, if we look at France, France is a perfect case study of because it's a product of the OR strategy at work. We launched France in March 2022, so just probably 15 months ago. We now not only have a large and growing pipeline, but it's a very high quality pipeline. Within the pipeline, 5 of those projects, as you see here, are already well shaped. We announced only 3, which is France MDC, Gardanne, and Limoges, but we have 2 more that we expect to be announcing soon. The 3 projects the one that we announced are engagements with well-established, well-funded utility players. France MDC is in the process to be sold to a utility. The Gardanne process is just something that validates the profile that we have in France when we have secure government funding to carry out an important feasibility to transition an old legacy coal plant into something future-proof as well in the energy transition. And the Limoges project is very important. It was an open tender by a municipality where we won alongside IDEX being the owner operator, and we just being the technology supplier that given the edge to win that tender as well. If you think about as well, another interesting thing to mention in France is like the 3 projects are what Jeff mentioned before, molecule projects where higher value is being generated now, both from a point of view of the offtake and the demand from investors. These are, RNG or hydrogen type of projects instead of just simple combined heat and power. So the fact that we win a public tender using our technology for more than combined heat and power is very encouraging to see that the profile from a technical point of view that the company has in this market already. As you guys probably all know as well, most of the projects where we are working in terms of renewable natural gas or hydrogen are working in collaboration, developing an integrated engineering solution with Wood. So this is a project that we brought to the table for Wood, and now Wood is also bringing projects, as I say, to the table for us. Another interesting thing happened in France is some of these utility companies are bringing the project to us. Having experienced what is interacting with EQTEC on the technical level, they have been then bringing other projects and portfolio projects that they may have, and we'll see this more and more happening in the coming months. As we said as well before, we intend to own none of these projects. Whatever we have, an equity position, or we're involved in the early development, we're pursuing rapidly to sell these projects and to sell them to an established utility company. All the permitting of this project is done, and they have very strong support from local and regional government, as you can see by the grant that we received for the Gardin project from the central government. And again, another thing as well that we mentioned before earlier when I was talking about access to capital, we don't need to be involved at all in the funding of this project. We can focus just to be a technology provider. Looking ahead, what's the outlook for 2024? So again, our order book is increasing, particularly at the level of engineering and design work. This is very important because the engineering and design work that we're seeing, particularly in France now, but also in Italy, it will become the orders that we'll receive in 2024, because obviously when we do engineering and design, we only do engineering and design majority for technology. So obviously that will create the order book for 2024 to receive the technology sales at that year. On that basis, we expect that we'll be coming out of the pivot in 2024. In 2023, we'll see a relatively smaller revenue per client, but more recurrently from a longer list of clients, where we can bill earlier and we can bill often, during the process. So as Jeff was saying, even if some project get delayed in achieving the funding to complete, or the utility client decide to prioritize another project, we've been paid along the process when we invoice for the engineering, and not where we are involved in the capital table of the company. That means that we can only invoice when we sell. So we'll see this transition. We'll be able to capture value quicker by invoicing early and regularly. And also our revenues profile will also smooth, and it will stop being backloaded, as when the project reaches financial close. We will continue to prioritize Croatia and France MDC to have the next two plants, up and running. As we mentioned before, Croatia is very close to, it's probably 6 months away or less from construction. We're looking to secure funding with a number of equity and debt investors, and the refinance of Italy will set the benchmark to attract this same type of funders into Croatia. In France as well, we're very advanced to sell the SPV and retain a carried interest and the ability to showcase the plant and use it and have visits once a month. If we think about, compare this with Movialsa, we have maybe once or twice a year maximum the ability to visit the plant. We don't operate it, we don't have access to the data. Italy already have had, twice or 3 times the number of visits that we have in Movialsa last year. So just the multiplying effect of having Croatia up and running and having France owned by a established utility, it will be critical for EQTEC. And in the case of Aggregas and Norfolk, which are legacy projects where we have little or no control on the delivery, where we have already captured the revenues, we continue to support and work with the local stakeholders and the funders to achieve one of these plans, if not 2, being online also in the short term. In the case of Aggregas, we have a team last week assisting them with the beginning hot commissioning, and in Norfolk we are fully involved with the bondholders in terms of providing the required support for commissioning these projects. We mentioned as well in terms of France, we are evolving and adding majority utility players in terms of the ownership of these MDCs, and we expect that also when we look at UK MDC or any other, that this will be owned by a large utility company. In terms of Ireland, we see new opportunities, particularly in the sector, in the energy-hungry sector or tech sector. So we're looking here not only for combined heat and power for data center, but also the production of ethanol, methanol, and other drop-in fuels. In terms of Spain and USA as well, we are being approached now by larger, well-established clients and potential customers, gas companies, fuel companies seeking to build hydrogen infrastructure, both in Spain and the US and others. We'll see more and more, as Jeff was mentioning before, and we say the transition of the demand is shifting to more molecule, chemical application, renewable natural gas, combined heat and power to power electrolysis, but also production of hydrogen directly from the synthesis gas. And now we have, as mentioned, a lot of inquiries around ethanol, methanol, and liquid fuels. In terms of a pipeline, again, to restate what Jeff was mentioning as well, working with larger corporates, established utility and established fuel companies, we will see that we'll have more revenues coming from engineering design for known names, and we'll be announcing this known name soon. And so the qualification of the project will be much easier, and it'll be just a matter of prioritize the project that are strategic important for this blue chip customer and stakeholders. And we're looking now also to, as I say, reconfigure as well as we transition more to working with larger corporates, that they become more on go-to-market as well, and they'll bring their own pipeline and their own strategic priorities for us. With that outlook, we finished the presentation where we wanted to give AGM to our shareholders. I want to close by thanking everyone, both our employees, that all of them are in a way shareholders, and we all appreciate the support and the interest for all our shareholders. We understand that it's not been an easy period by any means, particularly for the last 18 months, to be a shareholder of any public company. All we can say is we take this very seriously. We are all invested in the company, physically, emotionally, finance-wise. I mean, we talk about all of executives have to the extent of a big investment there. I mean, we have a team in Italy, coming, doing 16 hours a day, training the people, making sure that everything is well. We have a team, traveling on Sunday to Greece last week. Everyone is very committed to deliver the plan that we have, and we are not losing any enthusiasm because of the environment and the market. The market changed. The bull market will become again one day. We go from a bear market to a bull market soon. But what is very important is in whatever environment that we are, in whatever context that we are delivering operational progress. And I think we're doing that, and we really want to thank both our staff and everyone involved and our partners in delivering this, and also shareholders for the resilience and forbearance required to hold shares into any public stock. So with that, we would like to finish the executive presentation and perhaps move to the Q&A session.
David, thank you very much indeed. Just while the company and those in the room take a moment, I'd like to remind you that to recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Ian, perhaps if I can hand back to you to take those pre-submitted questions from investors, followed by those in the room, and time permitting those online. And due to the number of attendees on today's call, the company may not be in a position to answer every question submitted. However, all questions will be reviewed, responses published on the Investor Meet Company platform where appropriate to do so. Ian, if I may just hand back to you, and I'll pick up from you at the end.
Yeah, thanks, Paul. Let me take a couple of pre-submitted questions and then throw it open to those who are attending the meeting. First pre-submitted question is, what is the estimated sales expectation at the end of the year? And Nauman, I think you were going to answer that.
Yes, sure. Thanks so much, Ian. So the current market guidance is reaffirmed. If there is any change in the order book which would have an impact on the revenues, then we would issue a trading update through the normal RNS service that we have in line with the AIM regulations. As you'd appreciate that we cannot make any forward-looking statements at this stage, but just to reconfirm that the existing guidance in the market stays as it stands. Yeah.
And a second question is, Does the company have a definite pipeline of works past 2023, or are they just proposed pipelines? Jeff, maybe you could handle that one.
Yeah, there's a couple of key things to say. One, hopefully I've already said, which is that our pipeline of active projects is going to grow. I think we've said for many years now, we have more demand than we can actually service. And we get anywhere from half a dozen to a dozen new inquiries every single week. And we've got a very structured stage gate approach for how we manage those. So things coming in as inquiries, whether they come through conversations that one of us might have, or whether they come through the website or they come through email, they go into what we call a gate zero process. They are prioritized, they're vetted. Some things are for very small projects, say 200 kilowatts, and we simply say that's not really an area of focus for us. Other things are very interesting and they're very well outlined by a developer or a potential owner-operator, and in those we may engage. You know, for example, we're talking to a company in Brazil right now. We're not anxious at jumping into Brazil. There would be a number of conditions that would have to be met for us to have to go in, to go in there and do that sort of project. But as we become that pure technology provider, the door is open for us to address a far broader range of prospective projects that other people are running. So in terms of beyond 2023, yes, absolutely, we have a pipeline. And I think some of the announcements we made about, Limoges, for example, with Gardan, these are not projects we're going to deliver this year. We will do some work, but those are projects that are setting up for next year and the year after that. So, as much as we are focused right now on our market development centers, as we said many times, as much as we're focused on the very specific set of plants going live, we are also always setting up for the next year and the year after that. And that's a very active, ongoing discussion that we have.
Thanks, Jeff. Shall we move on? Let me just do one more while we're at it, because it's a good question. It says, by when do you envisage EQTEC moving into a net profit situation where income outweighs costs?
So obviously, as a management team, we have been focused on delivering revenue and profitability. However, with the challenging market conditions, our progress towards that goal has been slowed. We expect to achieve profitability within the next two years or so as EQTEC gains more traction in delivering on the market development centers. And there's a lot more interest in our technology from the top tier partners that David and Jeff have mentioned before. So we very much kind of ascribe to that goal, and we are we have put in a lot of discipline to make that move towards achieving that goal possible in the next 2 years or so.
Yeah. Let me go to the room and ask if there are particular questions that you want to raise in the room now.
Neiman, is it?
Yeah.
We've all invested money in the company, and you've only got 1 million shares.
Yeah.
Do you not believe in the company?
Okay, so just to paraphrase, because they might not be able to hear it online. Yeah. The question is that Noman's shareholding is pretty small.
He bought
in about 1 million shares, and so and the question is whether he has confidence in the company.
I do believe in the company for sure, and there is a lot more personal investment that you guys would not see potentially just in terms of the numbers of shares. But we have, all executives, not just myself, that we've agreed to take a lot of our remuneration in the shares. If you would not believe in the company's future, we would never do that.
Mm. Another question?
David, when you come in, your salaries increased by from 200,000 to 400,000, and now you're reducing it by 25% by taking that in shares. So you've still had an increase by 50% since you come in. And
the salary is not 400,000. That includes.
It is with your benefits and pensions and incentives.
So just to summarise for those who are online, and there's quite a lot of people online, basically a question saying, are the current executive remuneration packages justified?
Well, I don't mind them getting paid well if you deliver
or even double your money from now if you deliver.
Yeah. That understand the point you're making, that you expect directors to be paid for performance, and that's the sort of the question. Let me as
empathy with the shareholders.
Let me as sort of chairman of the remuneration committee just sort of give you a response to that. I mean, basically what we do which is what most professional companies do, is we look very closely at benchmarks published by expert and third market parties for relevant aim and small market cap companies with capitalizations of 150 million or less. We benchmark those, and that's basically how we've set base salaries.
20 million market capital.
The board is actually paying well below those benchmarks, and we made some uplifts in remuneration in 2021 to make it closer to, but still well under benchmarks for what's out there. And I actually think that investors should recognise the quality of talent that we have in the business. I think the presentation that Jeff and David just took you through clearly demonstrates the strategy for the business, what our plans are for the future. And that is not reflected in the share price. And I think that the share price of EQTEC massively underestimates the potential of the company. And I hope that changes. But AIM is just a very difficult market. When you look at share prices for some of our peers who the industry compares us against, the likes of Ceres Power or ITM Power or Velocys, they've all gone through a really tough time and seen their share price drop as well. So it's disappointing that the markets don't value EQTEC higher at the moment, and we hope that through presentations, through performance, that we will get a re-rating of shares in the future.
If you get the MDC sorted in Italy, surely people would start having confidence in you that you can deliver.
Well, we certainly.
1 week's time, maybe you're going to deliver it, didn't you, David?
Yeah, Italy, as I say,
completely handed over to the client in 1 week's time. Up and running, producing electricity.
Okay, can I just summarise the question in case it can't be heard online? His question is Italy going to be handed over in a week's time, and will that make a difference to the share price?
Yeah, all I answer about Italy. Italy, the handover of these plants can take up to 6 months of normal plants. Italy is very important for us because it's a market development center. Now, the revenue, from a point of view of the technology provider, we have received the revenues from Italy. We're just making sure we have used Italy's MDC already with visits, as I mentioned before, in providing data to particular stakeholders. So, yes, the handover is a milestone, and particularly as we're going to be refinancing Italy. But the obsession about the handover, it doesn't change that it's fulfilling the revenue profile that we discussed that we're going to receive from that, and the fact that it's working as a market development center. Of course, the more people we can take to Italy, and one thing that we're discussing before the AGM is to organize a retail or investor meeting and go to Italy and take a group of 15, 20 people. That would be great because, as Jeff was saying, when you have a vacuum of information, everyone will come with a conjecture or fill in the gap with something.
Proof of concept, David. The Italian MDC delivered would be proof that you can.
Absolutely.
The concept works.
Well, yeah, Movielsa is proof of concept as well and has been operating for over a decade, hasn't it? Yeah. The gentleman at the back had a question.
You're disappointed with the share price at the moment. Why should the market value the company more when you've got no production? Like, you've got one project now after all these years, hopefully you hand it over in the next 6 months. How many projects will you hand it over in the next 12 months? You've one done this year. How many projects will you have handed over next year?
Yeah, so the question is about is about how many projects are.
Well, why are you disappointed with the share price when you're not performing?
And the question is about projects, which is probably not exactly what the presentation is about, which is actually how we move from projects. Yes, market development centres as projects, but how we move from projects and pivot. But maybe, Jeff, do you want to pick up that one?
Yes, I mean, again, we have to come back to the facts of the situation here. First of all, handover. Handover is an agreement between the commissioning party, in this case, EQTEC, working with our EPC partners, to hand over to the owner and operator of the plant, who's not us. It's a company registered in Italy. We are the second shareholder in that, and we're only a shareholder for exactly what David said, because it's a market development center, and as you're saying as well, because it's a proof of concept for what we want to do. And therefore, it's very important to us. That company has to be ready to run that plant. Now, David alluded to this earlier in the presentation. Getting staff for that plant has been no mean feat for that company, because Italians, we're in the middle of a touristy, agricultural area where you don't find a lot of plant operators. And we're working with actually the largest staffing agency in the world. And we're working with their local office. They have had to work very hard to find staff who are qualified to run that plant. So that means the recipient of that plant has not been ready to carry on without us. And as David said, EQTEC engineers have been going on site, working alongside that team, and it's a good team, but working alongside that team to ensure that they're getting up to speed. So handover is not simply a matter of the technology doesn't work. To the contrary, the results we've had that, again, David mentioned earlier, we have sent to prospective clients, we send with pride, because the syngas composition is exceptionally good. It's very, very good. So we are in a very good position to hand over, but we cannot hand over until we're able to hand over. And you're absolutely right. Until we can, we don't have a reference plant that we can say is running. But we've still been doing visits anyway. And not only have we been doing visits, but some of the work that we've put on screen today, like Limoges, some of the other projects that we put on screen today but have not yet announced, but hope to announce soon, are coming online because they're visiting the Italy plant. And they're seeing the exceptional results. They're seeing that we have thought through the entire process end to end. The feedback we're getting is, you guys have thought of everything. And they're sending their experts, they being utility companies, big investor utility companies, they're saying, you guys have thought through all of the big problems we've seen with this kind of process in the past. So we have supreme confidence that Italy will be handed over when handover is possible. And we have said, we've been on record that we will announce it as soon as that happens. The last thing I'll say is, because of that, we are not spending nearly as much time on Italy as perhaps others are, because that will happen. What we're doing is we're moving on, we're building the pipeline, we're bringing in new clients, and we're selling new work.
Yeah, let me knock off a couple of pre-submitted questions. And Paul, is it okay if we go to 1:15 before we close the online meeting?
Absolutely.
We can have a chat.
Absolutely.
With those in the room.
Of course.
Yeah. So the fourth question will be: can we expect a share consolidation before the next round of equity raises?
Yeah, I can take that.
David.
Yeah. So again, I think this is in the context of, I think there's two questions here. One, you do a share consolidation, and what is a new equity raise? As I mentioned, when we're talking about strategic investor and what we're looking at, we don't believe that the capital markets at the moment, particularly not AIM, are a suitable venue to raise any more capital. Particularly, we want to avoid as much as we can dilution in the current valuation. So a share consolidation will make sense for a number of reasons, particularly because when you are below a penny, I mean, a lot of the platform or some of the custodian cannot even take your shares. So in isolation, a share consolidation doesn't achieve anything. In the context of a strategic transaction with a specific investor coming to the company, or a move to a different exchange, like we're evaluating it potentially in the States, then you have a share consolidation as part of a transaction. But just do a share consolidation, on its own, it doesn't achieve anything. So in the future, can we expect? Yes, in the context of strategic transaction in isolation, there's no point of doing it.
Yeah, and David, there's a question really about sort of, well, maybe not for you, but maybe now I want to answer. It's one really about dilution and about adding to shares on issue when we've got, an undervalued company at the moment. Do you want to take that one?
Yes. So we do understand that the company is currently undervalued, and we are cognizant of the fact that any placing that we do at this level is going to be highly dilutive. So what we are doing about it as a management team is three things. First, as David mentioned earlier, we have appointed an investment bank who are looking into, who are actually garnering interest from investors who would like to invest into projects that would use EQTEC's technology. So that's one thing. So as we are moving from becoming a project developer to just a technology provider, we want to ensure that investors who are adept at investing into the projects and coming into the projects, that this investment bank that we have appointed can actually bring those in. The second thing that we are doing, which is more in line with the pivot again, is that we are shedding off development liabilities. As mentioned in our annual report as well, and as Jeff mentioned earlier, there are 18 million euros worth of development liabilities that we came out of as a result of renegotiation on the projects or the contracts that we had on some of the UK pipeline. And the third thing that we are doing is we are really going after recovering capital on the projects that we had actually deployed capital before. It could be in the form of refinancing. So, for example, once the Italy plant is kind of handed over, then we hopefully we can announce the refinancing of that plant as well, and also selling the project SPVs without naming any particular ones. But we are reaching out to the investors who can actually take our stake in project SPV so that we can release capital from there on. Because investors it's their business to actually invest into the projects, and it's our business to just provide the technology. So we are kind of going along into deploying our strategy. So those are the kind of steps that we are taking to ensure that we reduce these instances of dilutive share placements.
Yeah, and another question, I think this is for David as well. Given the share price, is there any intention of the leadership team to take the company private?
Not at this valuation. So there is no secret, particularly the work we've been doing with the investment bank, that being a small cap public company restrict the type of investors that you can go for. A lot of strategic investors are not geared to deal with a publicly traded company. But the reason why we're looking at alternatives to set up private vehicles where they can invest with a license for technology is exactly to prevent or to address that requirement. So we will not, it would make no sense for us to take the company private at this valuation. But we are looking at how can we benefit from attracting that type of capital in a private vehicle that is not necessarily the listed vehicle. And as we move more to be a licensor, we can license the technology to that private vehicle where capital can be put into the company without being dilutive for the shareholders.
Thanks. And there was a pre-submitted question as well saying, have any large investors committed to EQTEC technology? You covered that a little bit, but
yeah, I think it's the same. It's the same thing that we are talking about the private vehicle. I mean, some of the large investors, are prevented from being in public companies. Some others that have done, like we have seen some companies, like Linde and other companies that have invested in the sector, has been, at a time where the market was very different. Now, we have not really pursued strategic investor of this caliber until very recently, hence the appointment of the investment bank. And the reason is because we mentioned this before, we were building the minimal commercial infrastructure to be able to be more attractive and more valuable to these investors. So that's the situation where we are. We believe that now that we're talking to, people are now known in the market or discussion with the like of ADEX, which are owned by private equity. but you also will start listening to and hearing new names of new companies that very much can be a strategic investors. All of these are discussing about perhaps investing directly in a go-to-market like France. So we are seriously pursuing a structure now that even by being quoted, we can attract that type of investment.
Yeah, thanks, David. There was a question on the executive remuneration, but one of the gentlemen in the room's already raised that. So maybe we move on to the next one.
Ian, may I just add to a point of technicality on the remuneration?
Yeah.
It's important to know that we are not paid in our package or anywhere near it unless we perform. So the numbers that we report in the annual report are a total maximum potential. I think there's a lot of misunderstanding about this. The amount that we are guaranteed of that is much smaller. And we go through a rigorous balanced scorecard exercise at the end of every year as part of our business planning going into the next year. Once we approve that, then we weight every one of the measurement points in that balanced scorecard. And this is a classic common practice in most businesses. We then go through and score those. And we are very hard on ourselves, I think, in terms of how we've performed. That is how the business has performed. And our remuneration is directly tagged to that. So, and that remuneration, both in terms of any kind of cash bonus, which we will receive 0 of for last year's performance, 0.
What percentage,
right?
What percentage of the remuneration did you get last year?
What percent did we get last year? A lot less than the maximum potential.
Your performance was a lot less, obviously, than what you were betting.
So, and then the second point is that any share options to be released are also tagged to that performance. So a significant 60% of our potential share, receipts are pinned to the company's performance. So the point I want to make here is, and this is again, standard practice across companies, but going back to Ian's point about benchmarking, we have a higher proportion of our performance pegged to company performance than most other companies of our size do. And when I say our size, I mean 150 million market capital or less, which is the benchmark that we're using. So in no way do I want people here to think that the numbers that are published in the annual report represent what the directors are being paid, because it's not true.
And just to make a point about attracting the right talent, if we think about this company have 27 employees, 20 are engineers. So you need to attract, each individual that we attract to the company on the corporate center, same in the engineers, have a market value. So if you don't pay the market value, that talent will go elsewhere. Now, to make your point about performance of the share, we could share the data with you after. This is not different to many companies in the sector. So what do you do in a moment of crisis, where you have a bear market, you have unprecedented economic condition, you will cut the salary of people that are worth more and being paid elsewhere. So you have an exodus of people that you need to hold the boat steady in a critical time. It's counterintuitive. It doesn't make sense. All of us here, I can speak with the CFO, COO, and myself, and the CTO as well, but particularly us, we have, in terms of basic salary, a reduction to what we were earning before joining EQTEC, a significant reduction, because we will have a share package, and we believe this is a multi-billion company to be built in the making. If you think about that as well, just to continue, we, as early as the previous place, and the last time that we put money, which we don't have disposable income like we had before, that we put money into the company, Jeff, myself, it was a 150. So we feel the pain equally like everyone else. In addition to that, we're putting the 12, 15, 16 hours required to deliver the plan. I understand for you it's particularly difficult as well, because you've been in a journey since 2008 into this company. But as we say, I joined the company in September 2019, and we reinvent the strategy of the company. Jeff joins nearly a year after, and Numan 6 months after that. So I am the longest that I've been in this management, for less than 4 years in the business. That when we joined had a 25 million debt and a 10 million market cap. So things
happen quickly, but 4 years in the middle of the last 3 years, you need to attract very good people that can do, the job. Yeah. So
Can I just say one final thing as sort of chairman of the company on this before we move on to other points, and that is, over the last year I've seen just how hard these guys work, right? And these are talented guys that could go elsewhere for more money and less stress, but they're actually invested in the company and wanting to make it work. And we have to reflect that, and we have to reflect the flight risk in our remuneration policy as a business. And they are, fully aligned and incredibly committed as executives. And I just want to say that, and I actually think that I'd like shareholders to recognise that a little bit more. I could maybe move on because we've got 4 minutes left. Just to the last couple of questions that we've got. We had a number of investors pre-submitting questions saying individual projects and the briefing on them always seems a bit unclear. We've talked a little bit about that, but is there anything more you want to say, Jeff?
Always.
Yeah, indeed.
Yeah, and it follows on from the point we're making about our role. If we don't own the project, it's not our gift to announce the details about a project. That's the first thing to say. There have been several questions, and apologies to the audience here, because I've been going through the questions that have been coming in online. There have been several questions about Agrigas, because we know that Agrigas made an announcement, in the past few days about what's happening on that site. That is within their right to do. They are the owner. They are the developer of that project, and it is theirs to announce how they wish. It is not the technology providers, right to go and say that. If Microsoft goes around talking about, some of the big implementations they're doing at their customers, they can only publish that on their website with permission. And we are not in a position right now that the plant is not, done. It's not 100%, and therefore it is not our gift to go into any detail about what's happening on that project. The second thing to say is that those of you who have done large-scale projects before know those projects are subject to a lot of change. We have in the past, when we were developing projects, talked about financial close. You can't pin down a date. You can set a target date, but you will run into a lot of challenges in terms of hitting that date. As a publicly traded company, if we have to constantly go out and revise what we've posted before, what kind of confusion does that send the market about what's going on? The feedback we have had, and I know that we've had several bits of feedback saying we don't say enough. We get exactly the opposite feedback from our advisors, which is we say way too much. And that brings me to my third and final point, which is give people who don't have the experience doing these types of projects a little bit of information, and they will turn it into something it is not. They will misunderstand it. They will extrapolate from it. And before you know it, there's a whole conspiracy theory about what's going on. That is very dangerous because we're publicly traded. So I would defy anyone, or let me invite people, because I hope you find some, to show me what's happening in BP's projects or Shell's projects or Centrica's projects or any big utility. What kind of detail are you seeing published about what milestones they have, whether they're hitting those milestones, how much revenue they're going to get, and that sort of thing? I think you will not find that in any other publicly traded company. And that is why we are very careful about what we say about projects. And keep in mind, under AIM rules, we must say certain things, but we must also be careful to not say other things. And so, we do our best to communicate as much as we can. We've often said how much we appreciate the engagement of our shareholders and how actively engaged they are and how much passion they have for EQTEC. And we don't take that for granted. But we also have to be careful about what we say in the interests of shareholders as much as in the company at large.
Yeah, thanks, Jeff. And yeah, thanks for making the points, because there was another question on milestones and completion dates, and for making the points on Agrigas, which I know has been sort of one of the online questions.
Yes.
I think that really sort of times us out. So, Paul, can I hand it back to you to do the online closing, and then we can have a talk informally with some of the people in the room.
Fantastic. Thank you very much indeed, sir. On that note, thank you and the board for updating attendees today. Can I please ask attendees not to close the session? You should be automatically redirected to provide your feedback in order the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure is greatly valued by the company. On behalf of the board of EQTEC PLC, we'd like to thank you for attending today's annual general meeting, and good afternoon to you all.